As the rate of home sales slows, the available inventory of homes for sale is climbing quickly through July. As we roll into the second half of the year, we're starting to have some visibility into price and inventory changes for 2023. So we'll explore that a little bit today. Every week, Altos Research tracks every home for sale in the country. We analyze all the pricing, the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos market reports with your clients, your buyers and sellers right now, it might be a good time to step up. Go to altosresearch.com and book a free consult with our team, because everybody is worried about what's happening right now, and they need you to help them see clearly. I'm Mike Simonsen. I'm the CEO of Altos Research, and here's what we're looking at for the week of July 18, 2022. Right now, there are 509,000 or so single-family homes available unsold on the market across the U.S. That's the most we've had in almost 2 years, and 31% more than last year at this time. That's a 3.6% weekly inventory increase. It's substantial, but it actually may be showing some signs of decelerating. A month ago, inventory was climbing by 6, 7, 8% per week. Now we're in the 4% range. So I expect a few more weeks of hefty increases in inventory this summer still. But maybe we've rounded the corner on the steepness of that slope here, the far right edge of the chart, maybe starting to turn the corner. A wild card in forecasting inventory growth for the rest of the year is the new construction in places like Texas, where they've been building huge numbers of new homes. And many of these homes were delayed earlier in the year due to the supply chain issues. In the Altos data, if a home is future construction, not yet actually available, we don't include it in the active inventory counts. Now, as those homes get closer to completion or completed, they move from pre-built into active inventory. And that'll actually accelerate the inventory increase in markets that are already changing the most quickly, places like Austin, Texas. So funny how that works. We expect that the summer will peak with maybe 625,000 homes on the market, and we'll end the year at about 540,000. You can see the dotted line here curve as the forecast for the rest of 2022. One aspect we discussed last week on the Altos webinar is how our inventory right now might actually be pulling supply forward from the end of the year. You can imagine sellers who've been thinking about selling at some point this year hurrying to list now before they perceive the market gets even slower in the future. So if that is indeed happening, that would put a cap on inventory growth later in the year. I should note that when we talk about inventory forecasts for this year and next, this is really looking at the housing data we have now and what we know about seasonal patterns in real estate. What's not visible are the exogenous variables, the big shocks that might come from outside. What happens if mortgage rates spike up big from here? Or what happens if the economy tanks notably from here? That stuff is only built into the data in buyers and seller expectations. It's not actually built in anywhere else in the direct count yet. So we can speculate on these things, but we don't have any ability to predict interest rates or economic growth, for example. So assuming things don't go nuts, this is a view on where inventory should end 2022. If we see the dotted line, for example, keep climbing in October, that would indeed be a new signal that's something, and it's something to keep our eye on. But right now, we can expect this curve. So we assume normal seasonality, or sort of normal seasonality. 2023 will start with far fewer homes than we even started 2020. So it's not that big. It's not that many homes on the market. Supply is right now the best it's been in a few years, which is good for buyers, but it's not likely to be a lot. So you might consider this when working with buyers right now. Many buyers are understandably super afraid. If they wait, they'll be getting more selection in the next couple months. That's true. But it's not likely to be a huge surge unless, some other force rocks the market out there. So prices, meanwhile, are past their seasonal peak, which is also normal. The median price of single-family homes in the U.S. is $451,000 this week. That actually ticked up a hair from last week. The median price of the newly listed cohort dropped 1% week to week to just under $401,000. That happens this time of year, but it's probably bigger than normal price drops right now as new sellers are aware of the shift in the market. I mentioned that sellers may be pulling supply forward, worried that conditions get worse later in the year. And if that's your state of mind, you're also likely to discount your asking price just a little to stay ahead of the competition right now. And that shows up in the light red line here, the price of the new listings each week. Notice the second half of each year, there is always a separation between the new listings and the whole market. The recent drops, therefore, are in new listings price. They're notable, but they're not yet indicative of a big pricing weakness. It's also something to keep our eye on in the second half of the year. So we're watching if inventory climbs notably in October. We're watching if that price of the new listings drops notably from here. We'll also watch price reductions. So price reductions are climbing quickly as demand weakens. So there's no secret. But I'd like to give some context around price reductions. So the active stock is currently in what we'd call a normal range of price reductions. This week, a third of the homes on the market in the U.S. have had a price cut, meaning they were originally listed higher, they had no offers, so they dropped the price to find buyers. At Altos, we track price reductions as a percent of all the homes on the market. It's normally about a third of the homes cut their price sometime before they sell. You might see other sources track price reductions that happen in a given week. And so while the total quantity of homes right now with price reductions is normal, it was actually record low just a few months ago. And so the slope of the dark red line here is very steep. And this is how you see in the Altos data, the week-to-week changes in price cuts. So right now, it's a lot. The steepness, weekly, is a lot as the market adjusts. So the slope may in fact be unprecedented, even if the total number isn't really that money. So this really shows how abrupt the market is happening. The summer of 2019 had the most price reductions in recent years. That's the yellow line here. And that was because interest rates rose throughout 2018 and the buyer demand slowed dramatically. Price reductions climbed all the way through 2018. And, we've been talking about this all year. So next week, it looks like we'll surpass the 2019 levels. We'll have more homes on the market now with price reductions than at any time in the recent years. What we're looking for after then is for the slope of the price reductions curve to start moving a little more flat. In the fall, new listings price at a little discount so they don't have to price cut later. Fewer price cuts in the fall is sort of what we're looking for. But that slope of these price reductions hasn't really rounded the corner yet. Like we were looking for in inventory, haven't seen it yet in the price reductions. That implies there's still a lot of adjustment that sellers need to make. I expect we will be at 40% price reductions before the end of the summer. And that's another reason why, as we've mentioned previously, we really don't see home price appreciation for 2023. Immediate sales, however, are still happening. for the homes that are priced well. And these are the homes that are on the market and they take offers essentially immediately after listing. I saw on Twitter Ryan Lundquist, an appraiser in Sacramento who goes by Sac Appraiser on Twitter. He mentioned that even in Sacramento, one of the super hot pandemic markets where price reductions are now skyrocketing as the brakes have been put on, even there, still about 40% of those sales are multiple offer scenarios. And that's what we see here. Around the country, we still have 18% of the new listings are going into contract essentially immediately after listing. That's the fewest percentage-wise that we've seen since we've been tracking this way during the pandemic. It's still more than I keep expecting. I keep expecting it to fall faster, but there are still plenty of those that are getting their offers. There are buyers who've been looking for a long time. So the homes that are priced properly, the good properties, can still go quickly. It is going to keep steadily decreasing. Last summer, actually, the percentage increased later in the year as the market kind of regained some steam. It certainly took me by surprise by then. I don't expect us to regain steam later this year for now. We expect the reset to happen at the beginning of next year in January, and then a much more normal curve for 2023. We can see these opportunities for buyers finally opening. We can see that demand is still there for some of the homes that are priced properly. It sure looks like that while inventory is climbing now, we're not going to have a lot of selection next spring, not a ton. So your buyers should plan accordingly. If you need to have these conversations with your buyers and sellers, go to altosresearch.com and sign up now so you can have the data in your hands and the hands of your potential buyers and sellers today. This market is moving so quickly, and we all need you to be the voice of expertise right now. Okay, that's all the data we have time for this week. More next week. Thank you.